Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following segment is brought to you by Wilsey Asset Management. Okay, let's talk money. Who wants to be a millionaire? Brent Wilsey joins us today, and with some good news for you. Getting there may be a little bit easier than you think. Brent, here's the million-dollar question. How do we get there?
I want to call it easier. We got to do things right. And it takes some time, and that's the thing. And it is kind of funny, like, well, how a 401k, how can I become a millionaire with that? Well, it's actually happening. I mean, your large 401k companies, it's exploding. About 3% of their accounts are $1 million accounts plus. I know at our firm, Wilsey Asset Management, same thing. We're seeing more IRAs and 401ks that are now above $1 million. So it happens. But it's not a get-rich scheme that's going to happen overnight. It takes some time to do it, and you got to do it properly is what you got to do.
And by doing it properly, the earlier you get started, the easier it's going to become. Not that it is easy.
Right, yeah, and it's not easy. And the thing too, I mean, the numbers are pretty staggering. I mean, about 86% of those $1 million accounts are for people 50 years or older. So it's, you know, again, you got to start early to start doing it. Also too, about 1,000 people per day are becoming millionaires in the 401k. So if you're not, you got to get started, get going here. Yeah. But the thing you have to do is you have to invest properly. You can't be too aggressive. You invest too aggressive, you're going to invest aggressive, you're going to lose money, you're going to panic, you're going to pull out at the wrong times. Can't do that. And I know some people, well, I've done great for the last 1, 3, 5 years by being aggressive. That day will come to an end. I've seen it happen in my 45 plus years of doing this. Yep. And when it happens and it ends, you stop investing, you don't go on. Can't be too aggressive. Can't be too conservative. Can't put in the money market and bonds and especially something.
You'll never get there.
Yeah, so you got to go in the middle. You've got to find fundamentally strong investments like real estate and equities that will do very well for you, and you can weather the storm with those.
So with the numbers of people that are getting to $1 million, are they just being more disciplined, more aware of it, being more proactive? What's causing the increase in the numbers?
They're being more disciplined and doing it and not stopping. And the thing too is that they don't panic. I mean, you've got to understand what you're doing. And if you don't understand yourself, you got to find a broker advisor who understands the fundamentals of investing. Because if you just did something because it went up and it goes down, you're going to panic and sell. You've got to understand the fundamentals inside that investment, because bad times will happen. There'll be times in a year where you could lose 10, 15, maybe 25%. You cannot panic and sell because you won't come back. You have to understand the fundamentals and actually keep adding to it at that point in time. The other thing too that drives me crazy, which will prevent you from becoming that millionaire, well, my credit card bills are high, I'm going to take the money out. It's almost too accessible. Gee, I'm going to buy a house, I want to get this big house, I want to take out the 401k. You're never going to become a 401k millionaire doing that. So you want to understand the discipline, you want to do both, keep that money going in there, but get those credit cards paid off. Get that house doing other things.
I guess you have to keep in mind the ultimate objective, and don't use that as your savings account to take care of those daily, monthly needs. Yeah. It's the long range that you're looking at, right?
And let me give you some numbers. I mean, in San Diego, the average income for people is about $73,000. So if you were to take 8%, put in your 401k, that'd be about $486 a month. But you get a tax deduction, so it's really only about $365. Many employers match. The average match is about 4%. So if your employer puts in 4%, now your total contribution is $730. You're 25 years old. 30 years later, at 9%, not 10, 12, or high percent, 9%, that account will be $1,347,000. By the time that 25-year-old is 65, it'll be $3,443,000. And if your income increases, increase your contributions into your 401k as well. It'll be even more.
Yeah, so you can get there.
You can get there.
You can. There's
discipline.
There's numbers behind it.
Behind
when you say informed millionaires don't panic, what do you mean by that?
Well, because they understand what's going on. They understand the fundamentals of investment. They didn't just guess at it, oh, now it's fine. They're informed. They're a millionaire because they understand it. They talk to their advisor, the broker, and the broker is informed. Their advisor is informed, so they can talk it through. Not just, oh, stay the course, will be fine. No, here's the reason why. Yeah. You got great cash flow, good earnings, it's a great business. I mean, that's what, stay with it. You got to understand the fundamentals or you will falter.
Get the guidance. Rule number 1, right?
Get the guidance, get a good advisor.
Okay.
Yeah.
Thanks, Brent.
Don't get a salesperson.
Okay. You don't want that. That's not going to help you at all. More information about everything that Brent does online at smartinvesting2000.com. We'll be right back.